So some of the common questions you could get asked, guys. Identify material misstatements. That's quite simple for us. It's the first step of our process that we've already done. Or discuss whether the audit findings are material misstatements. So ultimately what you're doing there is identifying material misstatements and then describe the amendments you would request. So then you need to give the adjusting journal. So the additional point here would be to give the adjusting journal to make sure the misstatement was correct. Once again, we've already discussed that in part of our process. Step 3 it was. Or discuss whether audit findings are material. So once again, identifying material misstatements and then describe the impact on the audit opinion. So this is now new. So this is now us saying, what opinion am I going to give based on the results of whether the misstatements are material or not. Okay, and then finally, discuss the impact on the audit opinion if management refuses to amend material misstatements. So this is just a spin-off of this question, because in point 3, we're going to say if they amend, this will be my opinion. But if they don't amend, this will be my opinion. And step 4 is where we're just saying they only are not going to amend. So what is my opinion? Okay, let's have a look at how we would deal with them. So the first one, identify material misstatements. Easy. I need to compare management's accounting treatments, including disclosure, amount, classification, presentation, and disclosure to the applicable financial reporting framework to see if there is any qualitative misstatement. So I look at the nature of the misstatement first. Then I need to compare the misstatement in terms of amount to final materiality to see if there is a quantitative material misstatement. So we're looking at the amount here. So when I have to identify if there's material misstatements, I need to do both to see if we've got quantitative and qualitative misstatements. So they will give you a list of misstatements and you just need to do these two comparisons to see if they are either or. Easy question. This comes up quite often for the level 1s. Okay, and remember, if I'm doing the identification, I just need to do the two comparisons. I don't have to go through the rest of my whole evaluation process. I'm just identifying if there are misstatements that are material. The second type of question, discuss whether the audit findings are material misstatements and describe the amendments you would request. So ultimately, they're asking for, number 1, are there material misstatements? So they've picked up some evidence through the performance of audit procedures. They want to know, are there material misstatements? And then, how would you amend the financials because of this? So, my first step, consider if a misstatement is trivial, and if so, you must ignore it. So guys, that's a step that you could add to our evaluation process, but often this is ignored as a step because most audit findings would not be considered trivial. And all trivial is where we believe a misstatement would be insignificant to the users. So it would definitely have to be not material. So it's immaterial, but it's not just about being immaterial, it's really an insignificant. And so maybe something like rounding of your cents would be considered trivial, and so you could ignore it. Okay, but so in your head, think about if it's trivial, put down a step that says there's no trivial misstatements here, so I move on. So then I go to, evaluating each of these misstatements individually. By themselves first, I need to first consider if it's quantitatively misstated in terms of comparison with final materiality, or whether it's qualitatively materially misstated in terms of its nature. So my step 1 right up top. Once I've done that, I need to move on to step 3, where I then go and say, is it factual, judgmental, or projected? Once I've done that, I say, if it is material because of either quantitative or qualitative, they must adjust and I must provide the adjusting journal entry. You need to go and debit and credit this to correct the material misstatements. But I also need to then discuss whether there were any of those misstatements that were immaterial. So they were not quantitative or qualitative. And those are then put on the schedule of uncorrected immaterial. And I need to show them. That's what I've done. Because when I'm discussing amendments, I need to still consider the aggregation of these, of all the uncorrected immaterial, because they together could be material. So I first do them individually, make them adjust if there's anything material, and then all the ones that were immaterial, I then go and add to the schedule. Okay, I audit the adjustments if management make the adjustments. And then, guys, we need to add here, I need to do that aggregation of the immaterial to see if there's a further adjustment. Aggregate the immaterial and compare to final materiality. And if it's in excess, I need to request adjustment to bring the total below final materiality. Okay, and I can just put through whatever journals I believe, because there could be quite a few that make up that list, and I just need to bring the total down below final materiality, so I can just say, just reverse this entry, and then the total will be below final materiality. Okay, so I'm doing the exact process that I have discussed as the evaluation process above. The third type of question, same thing. Discuss whether the findings are material misstatements. So you're doing the first step of, do we have a quantitative or qualitative? And then describe their impact on the audit's opinion. So now, as a result of these material misstatements, what opinion are you going to give? And this question comes out with multiple opinions, because we have to cover the scenario where management adjust and where they don't adjust. Okay, so we're going to have multiple. So what do I mean? I do the first step of looking if it's trivial, and then I say ignore it if it is. But most cases we're not going to have trivial misstatements, so I'm going to move on to step 2, where I first go and see, is it quantitative by comparing it to final materiality, and is it qualitative by looking at the nature. And then once I've done that, I categorize it. Is it factual, judgmental, or projected? Then I say, if there is a material misstatement, I need to request management to adjust. And that could be material because it's quantitative, qualitative, or both. And then I must conclude on an opinion if they do adjust, so there's one opinion, and then if they don't adjust, so So there's another opinion for each individual misstatement. So just like I've assessed each individual misstatement for being quantitative or qualitative, I now need to go and say, this one is material because it's quantitatively materially misstated. Therefore, they must make this adjustment. They must debit this, they must credit this. If they adjust, I no longer have a material misstatement, I will give an unqualified opinion. If they don't adjust, this misstatement means I would result in giving a qualified opinion. But then again, if that misstatement was immaterial, I go to the schedule of uncorrected. So I've got to take each of them individually and assess for material. If it's material, they must adjust. This is my opinion if they adjust and if they don't. If it's immaterial, to the schedule. Okay, and then once again, I need to go and aggregate all the immaterial on that schedule to compare it to final materiality, and then see if it exceeds final materiality, any of those categories, whether it be profit and loss, assets, equity, or liability, I need to request management to adjust, and then I need to, once again, conclude. If they adjust, but then also if they don't adjust. But once again, if those immaterial are still immaterial, once I've added them all up, they all together add up to less than final materiality, then I don't have to have an adjustment. And therefore my opinion would show that there was no material misstatement. Okay, and so the difference between 3 and 4 is question 4, I don't have to discuss if management do adjust and if they don't adjust, like I did previously where I'd have to give 2 opinions. In this one, they refuse to adjust, so I only have to address that they don't adjust. And so it's only going to be the 1 opinion. Okay, so that one's from the above one. So how do I do it? There are misstatements. I need to first, once again, see if they are quantitative and qualitative. I can't just assume that there is a misstatement. I need to discuss it. And then discuss the category of the misstatement according to the auditor. Then I need to go and say, they aren't adjusting the misstatements. So I need to see if these misstatements are pervasive, which means that they affect multiple balances and transactions in the financial statements. Or is it just one misstatement in one, and then once again it's not pervasive. But if it affects lots, because it's likely here that there would be lots, and management are refusing to adjust them, I need to go and say, I've got to look at all of them almost in aggregate now, not just in isolation like I do above. The fact that they're refusing means I need to make a statement that says that there is a disagreement with management because they will not adjust. And then I give my opinion based on whether the misstatements are quantitatively and qualitatively material and pervasive, because they're lots, so I will have a specific opinion that shows that there are lots of material misstatements. Okay, and we're going to get to the opinions next. So let's quickly look at the standard and then we can attempt a question.